So let's start with the salary income. So yesterday we discussed about exemptions. Now we are starting 5 heads of income. So there are 5 heads of income. It's like 5 sisters. There were 5 Pandavas in ancient India. As per the mythology, there were 5 Pandavas, and that 5 Pandavas, like 5 heads of income, everyone had some specialty or some special provisions, how they work, what is all about that. So we will study these 5 heads one by one. So the first head of income is salary income. So let's understand about what and all about salary income. So what included in this head? What all incomes are taxable under salary income? Income under the head salary. The first, the most important word which comes by the name of salary is remuneration. Whatever remuneration you get from your employer, including all the perquisites. What is perquisites? Facilities. So basically facilities provided by employer to the employee is known as perquisites. So all the facilities has the name perquisites in income tax. Received from employer in a contractual employer-employee relationship. So there has to be an employer-employee relationship, because you might get remuneration from a professional work as well. For example, I'm a chartered accountant. I do audit of so many people. Now, my client pays me remuneration for the audit work done by me. Whether it is salary? No, because there is no employer-employee relationship. I am not his employee. He is not my employer. He is my client. I am his auditor. There is no employer-employee relationship. So whenever there is employer-employee relationship, contractual relationship, the contract can be oral also, but there has to be relationship of employer and employee. Then only the amount will come under the head salary. The contract can be express, oral, or implied. It can be, it may not be written. It can be oral, implied, express, in whatever manner it would be. The salary is always chargeable in the head salary on due or receipt basis, whichever is earlier. For example, I earn 50,000 per month as salary. My employer has promised as an employee to pay me salary of 50,000 per month. I worked for March. Normally I get salary on 30th, that is the last day of the month. But for the month of March, there was some money problem with my employer. He said, I'll pay you the salary after 5 days. On 5th April, he said he paid me the salary. So whether this salary will be income for the March or April, because it was due for March, but it was received in April. Which month it would be considered? Whichever is earlier. So whichever is earlier, March. So due or receipt, whichever is earlier. It can be the other side also. Suppose in the month of March, I requested my employer, sir, I have money problem now. Please pay me advance salary for the month of April also. The employer was very generous. He paid me salary for the March and April both. I didn't work for April yet, but he paid me the salary. So whether this double salary will be taxable in the month of March or April, the answer is March, because it was received earlier now. It is due in April, but it is received in March. So it will be taxable in March. So this is the meaning of due or received, whichever is earlier. Arrears also included if not taxed earlier. Sometimes if anyone of you have government employee in your family, you must be aware that they get arrears many a times. What government does, government applies a rule. Okay, it's December now, so let us apply a rule that every single employee of the government will get a hike in their salary with effect from April 2023. So what they do, they give a hike in salary from a previous date. So suppose you get arrear of, because your salary got increased from April, but you got the less salary because no one was aware that salary would increase in the December from the month of March. So in the December, you will get 9 months incremental part. Suppose your salary was 50,000. Now government has increased your salary by 10,000 with effect from April 2023. So you will get 9 months into 10,000. That is 90,000 in one shot. So you will get 90,000 today in December. So which month it would be taxable? Now it was due in April, but no one was aware that it is due or not. But it is received in December. So it will be taxable in December because you did not pay tax in April. You were not aware. So arrears will also be included if not taxed earlier. Suppose you were anticipating I will get a salary of 10,000 hike. So you paid tax on 60,000 in the month of April itself. Now you don't need to pay tax again because you have already taxed it. So if not taxed earlier, you will get, you will have to pay tax on arrears also. So what is all included in salary? Wages, dearness allowance, bonus, gratuity, annuity, pension, advance of salary. Everything is a salary. Everything is included income under the head salary. Fees, commission, perquisite, profits received from employer in addition to salary. Leave encashment while in service. Employer's contribution to provident fund in excess of 12% of salary. Profit in lieu of salary. Now, let me explain you a bit about what all these are. What is the meaning of these words? Wages, we know. Dearness allowance. Dearness allowance is not to kill the deers. It's for towards the inflation, because in market there is inflation. You get 10,000 today, but if you get the same 10,000 for 1 year, the inflation increases. Whatever you purchase today for 10,000, you cannot purchase after 1 year for the same 10,000. You have to spend 11,000. So that is dearness allowance will cover that. This is towards inflation. So dearness allowances, allowance to meet the cost of inflation. Bonus, we all know, probably. Gratuity, I explained you in the last class. Amount paid out of gratitude. You worked with so many years for one organization. They are grateful to you, so they are paying you gratuity. Annuity or pension is pension. We all know what is pension. You get after the retirement, after the age of 60. Now, what is pension? We all know. Then fees, commission, because your employer may pay you some fees, some commission for whatever name called. They can name anything for the salary or for anything. So whatever you receive from your employer, in addition to your salary, is also salary. You may get a profit, like share in profit. That's also salary. Leave encashment. I also explained this last class that you can get cash out of your leave. So that is also salary. Employer's contribution to provident fund. So basically every employer deduct certain amount, say 15% of salary, and deposit the same to the PF fund. It's a provident fund that is used for your future pension. So you will get a pension out of your PF. You may get a fixed total amount while on your retirement. You can get in any way this amount. So that provident fund is for your retirement purposes. So that provident fund, which is employee contributing from your side, because in provident fund there's a fund for your retirement. So you contribute 12%, your employer also contribute 12%. It gets 24% that you get when you retire. So that employer's contribution, which you don't get actually in your account, it's deposited directly. That is also a salary. So whatever you contribute is definitely part of your salary. Whatever your employer contribute is also part of your salary. So employer's contribution to provident fund in excess of 12% of salary, because up to 12% is okay. More than 12%, it will be your salary. It will be your income. Profit in lieu of salary. Your employer may give you a share of profit. He may not pay you salary. He will just say that I'll give you the profit share. That is also salary. So everything is salary, whatever is being paid by your employer. Now, what are the elements of salary? So as per section 17(1), because I explained you the general meaning of salary. Now, what is the exactly written in section 17(1)? Wages, pension, gratuity, fees, commission, perquisite, profit in lieu of, in addition of salary, advance salary, leave encashment, employer-employee contribution. The interest on provident fund is also salary. Employer's contribution to pension scheme is also salary. So these are the elements of salary. Now, what all are the exemptions from the salary income? Already discussed earlier. So these all are the salary, and there are some exemptions. Let me just recap all the exemptions. These are the exemptions from the salary. We discussed in few class back. HRA 40% of basic, DA 50% in case of Mumbai, Delhi, Kolkata, Chennai. Rent paid minus 10% of basic plus DA, actual HRA, lower of the following. ATC deductions, basic exemptions, gratuity up to 20 lakh, commutation of pension, leave encashment during service, fully taxable. In case of retirement, government employee, fully exempt, non-government employee, up to 3 lakh, leave travel concession, actual expenses, VRS 5 lakh, medical treatment 25, 50,000, abroad treatment, RBI limits, if treated in government or approved hospital, reimbursement exempt, gift up to 5,000 per year from your employer, professional tax paid to state government, entertainment allowance up to 5,000, conveyance and transport allowance of cost of travel, refreshment during office hours, vehicle for coming office, recreational facilities, because I told you facilities are also taxable, but these facilities are exempt. Refreshment during office hours, vehicle for coming office, recreational facilities during office, these are the exempt. No tax will be there on these things. So these are the exemptions that we just discussed again. Now perquisites. Suppose you get few facilities from your employer. Now, like how much will be taxable? For example, your employer has given you house. Live in the house provided by employer, because everyone knows that all the big level employees, all the top level employees like MD of the company, they get house from the company. Even the prime minister is an employee of government of India. Prime minister is an employee under constitution. They also get a house to live in. Everyone knows where the prime minister residence is there in Delhi. He live in that house. That's a facility provided by employer. Now, how much tax he has to pay on this facility? How to value that, how much facility he is getting? How much tax should be there? So we have to value the perquisite, because these are the perquisites. These are the facilities. We have to value them. We have to compute a value of these perquisite. Then only tax will be payable. So facilities provided by employer to employee to be taxed as per the valuation as below. So I just told house provided by employer. So rent-free accommodation, section 17 subsection 2 clause 1. How to calculate the value of rent-free accommodation in case of government employee. Now, in case of government employee, we call it Sarkari Damad. The government son-in-law is the government employee. So in case of unfurnished accommodation, in case of accommodation which is unfurnished, there is no furniture or other things in the house, then there is a license fees system of central government. So central government determines the license fee. Even the PMO can be valued as per the license fee. So every single house provided by government has a license fees according to the area, city, and locality. So that license fee determined by central government will be the value of perquisite for the purpose of paying tax. If it is a furnished accommodation, furniture is also provided. So many other things are provided in the house. Then license fees determined by the central government plus 10% will be added for the furniture. If concessional accommodation is provided, that means they're charging some amount from you, say a few amount. Like for example, if they have provided you house in the posh area of the city, but they are charging just 2,000 per month, 5,000 per month, which is very less. So this is concessional accommodation. They are charging you concessional rate of rent. Amount as determined above. So there must be a license fees determined by central government for that house, less the amount payable by employee. For example, the license fees determined for that house that you are living in is 50,000 per month. But the government is charging you just 5,000 per month. So how much facility that you are enjoying? 45,000 per month. So that amount 45,000 per month will be added to your salary and you have to pay tax on that 45,000 also. In case of non-government employee, if the population of city in which you are living, in which the house is provided, is more than 25 lakh, the population is more than 25 lakh and you have been provided a house in that city, then 15% of the salary will be the amount of facility that is provided. For example, your salary is 1 lakh, you have been given a house in your city, that is population is 1 crore. In that case, 15,000, that is 15% of the salary, will be added to your salary as valuation of that house perquisite. If the population of the city is 10 to 25 lakh, then the valuation of that perquisite will be 10% of salary. If the population of the city is less than 10 lakh, then 7.5% of salary will be the value of that house perquisite to be added to your salary, and tax has to be paid. If it is a furnished, this is for unfurnished. If it is furnished, add 10% in the value all. So you have to add 10% for the furniture in the above. If your employer has provided hotel, suppose you have been transferred from Delhi to Bombay. Now you will take time to search new accommodation in Bombay. Now they have provided you hotel for 15 days, 10 days, or 1 month, that live in the hotel and search for accommodation. So up to 15 days, it's okay because it's required. They have provided you hotel facility for 15 days because it takes time to search for the facility. But it is more than 15 days, then 24% of salary or actual hotel rent, whichever is lower, less any amount paid by employee for the hotel, if any. So 24% of the salary or actual hotel rent, whichever is lower, will be the valuation of perquisite, less amount paid by employee. So free or concessional education. So this is the next topic we will study tomorrow. Now, if there are any questions, please let me know.